This is Wyckoff Power Charting. Welcome. This is episode number 14, which was recorded on October 31st of 2018 to be aired initially on November 2nd. The title is Markets Down, What to Do Now. My name is Bruce Fraser, and I am with my co-host, Roman Bogomazov. Welcome.
Thank you, Bruce. Happy to be here.
So, we are closing out the month of October, and it's been a raucous month. So we thought what we would do today is just sort of have a look back, get the context of the month of October in the year of 2018, and then determine after this big decline, what to do now, how to move forward from here. So Roman, let's get started. First of all, we would like to invite you to our Wyckoff market discussion. This is market analysis and case studies using the Wyckoff methodology. We meet on Wednesdays at 3 p.m. Pacific time, and we would love to have you join us. We are inviting people to attend a free session by emailing us at the email address on the bottom right, and check in with us. And if you have not attended a free session of Wyckoff market discussion, we'd really like to have you join us. So this is a great in-depth session oriented towards deep analysis of the markets with Wyckoff methodology as the foundation of that analysis. So also, please attend my blog or come to my blog, which is at stockcharts.com. And there's a lot of Wyckoff content there that is free. Gosh, can you believe it? And then in addition, there's educational YouTubes over at the wyckoffanalytics.com website, and that content is also free. And you'll enjoy being able to spend some time with Professor Bogomazov and see some of his really great analysis. So please come check out these wonderful free resources. And then also you can check in on Wyckoff education that's being offered through the wyckoffanalytics.com website. And there's some tremendous classes and other events that are taking place there. So please have a look. Okay. Let's move on to Vermont. First of all, is there anything that you wanted to say about any of the upcoming offerings that we have?
I could only mention that we have a November special on the conventional technical analysis tools and Wyckoff interpretation. And we're looking forward to January, where Bruce and I are going to have actually a free session. So we'll announce that in our late November, December session. So stay tuned.
Wow. Well, that'll be, and that's coming up soon. Wow. The year's blowing by. Well, here we have a daily vertical bar chart of the S&P 500 large cap index. And you can see the run up in 2017 into a climactic surge that occurred in late January, and then produced this dramatic change of character and put the market really in a big range bound structure. And so you can see there's a bit of an upward tilt to it. It's been an interesting year to trade. And then in the month of September, there was right into the end of the quarter, there was an upthrust of the buying climax area and of the trend channel right there at the conclusion. And that produced an upthrust followed by a test that put us into a major change of character decline in the month of October. And so this month of October decline was a substantial decline that actually rivaled and was a little bit worse than the decline that took place in January, February. And so this was a very interesting period. And you can see that it's gone right back down to the bottom of this slightly rising trading range that we're in, and now there's an attempt to bounce off that low area. And so we thought this was a good time to be talking about the markets, because it's such an interesting juncture. Is this market going to continue on downward, making new lows below the lows of January, March, April, and May? Or is there going to be an important attempt to rally back up to the highs, or somewhere in between? So Rahman, what are your thoughts?
Well, I'm thinking about this tactically, right? Because we would be thinking, how do we trade this market? What do we do? And at which point do we actually engage ourselves into the market? So one of the first places that we've identified with Bruce in our Wyckoff market discussion classes was the area of absorption in April, early May, that created the causality for the price to reach the upper channel of the buying climax here in the upthrust manner. And then obviously this big bar, just a single bar by itself, produces a new short-term bias for us, which is to the downside. And look at the first leg to the downside, this one right here, into the minus sign of weakness. It has all of the elements of the distribution: increase in supply signature, big spread to the downside, breaking of the trend, coming back into the range below the area, below the resistance that was created by the buying climax. And that was so decisive. So we know that there is some institutional distribution that has taken place there. Look at the next rally. There is no lift. It doesn't even come to the resistance. So therefore, we could project a continuation of this move, which we did. But now we have to look at the character of the second leg to the downside. And we see that the spread to the downside is diminishing. We only had one big spread to the downside, was the more or less commitment to the downside. And then after that, we have one bar that has increasing demand signature. So there is an attempt to buy. Next bar to the downside has an increased effort to push the price down, inability to do so. And then 2 days ago, we had a bar with the demand tail off the support level, which tells us that demand is exhausted, the volume signature is slightly going down, and then we're expecting some kind of bounce out of here. And yesterday's bar confirms both on the price and the volume signature. Bruce?
Well, the interesting thing about the rally into the January peak is that this was a climactic surge. You can see the acceleration that's taking place in the month of January, and then it just exhausts itself and produces a big automatic reaction decline, which is substantial. But notice that there's really a very minor distributional structure at the buying climax peak area, and that this seemingly comes out of the blue, big change of character. And of course, we, from that point on, will establish that we're in some kind of a range-bound condition. So the uptrend has ended for the time being. So we were able to see an accumulation, which we would count with a point and figure chart. We do horizontal point and figure counting. This is this light blue box, and we were able to project the extent of the run up. And this was a very nice rally that we had. And you can see, though, that the rally from the period of absorption in light blue that also produced that point and figure count, you can see that the character of the rally is really somewhat different from the rally that occurred into the January 2018 peak. So there's a change in the structure of the uptrend. And then look at the big distributional structure that was taking place right here at the conclusion of the advance into August, September. And so this is a different kind of an animal from the one that we were dealing with back in January. So there's a big distribution there. And so, and the result was that we had a more extensive decline. And there was a lot of interior destruction in the individual stocks that make up these different indexes. So there was breadth destruction and so on. So this is an interesting place, and I think that we have to be very careful about our stock selection from here forward. So keep this picture in mind as we go forward. Any last thoughts, Ramon?
Well, let's look at the causality of this distribution around the upthrust that we've identified above the buying climax. And we would use the PNF charts to identify the causality. So Bruce, how do we take the count here? Why are we taking it on that line, and where does it fall?
Okay, so here is that same area. You can see this beautiful uptrend that occurred into the peak with a throwover. Notice the dramatic throwover in the last leg up into the buying climax. Keep that in mind, because that's what buying climaxes look like. You have a nice steady uptrend and then just an accelerating exhaustion move that goes up and then turns off of that and comes right back in again, buying climax. So this was very valuable to look at the market from this point figure perspective. So now we have a big, more of a sideways trading range. We are using here one box reversal methodology, and we're using 20-point scaling. This is S&P 500, 20-point scaling. And so the reason that we do that is because look at how we're able to pick up all of the essential ups and downs in the trading range. You can see them in the point and figure chart. So if we did 50-point scaling, yeah, we'd lose some of that detail. And this helps us to count the objectives correctly. Now let's get right into the distribution count. So you can see here that we started over at that last point of supply rally, which Ramon identified in the prior slide. And so there's a rally up at the midpoint of this decline, and you can then count across and to preliminary supply, or that one column up, which is 7 entries. And so that is like a preliminary supply or a minor buying climax. And so this doesn't stop the uptrend, which keeps going, and we still had higher point and figure counts off the prior base. But it went up into the top of this channel, producing, look at the change of character, look at the big decline downward with persistency. It just goes down and down and down, and then produces a last point of supply. Well, our rule is count from the last point of supply to, say, preliminary supply, which we've done here. And so we have a count across with 12 columns, one box reversal method times 20, and we take that count and it produces an objective down to 2,700. And so that becomes our first count. And then we count, that's from the peak, and then from the count line, we count across, and we can use the same calculation, which is 240 points, takes us down to 2,540. And so we produce a range, maximum and a minimum range for the objective, and you can see that we went right down to it and right to the parallel trend channel. So we're now in the range of that, so we could say, we could start to look for the conditions for some kind of an attempt to rally from this oversold condition. Ramon?
Mm-hmm. Well, let me talk a little bit about why we're doing this and why we always bring in PNF counts. Well, whenever we identify the bias, let's say we identify the short-term bias to the downside, and we are looking at the weak rallies where we want to open our position, we want to understand what's the extent of the downward move that we could potentially have here. That's why we're doing this. Bruce was looking at this column as the last column for the count. Naturally, there is a question of why this column, why not previous columns? Well, there are two answers to this question. First answer is that, as we've shown you, a smaller structure around the area of the resistance, you could see it right here. It's a little bit upsloping for S&P. It still has an upthrust nature to that, and it seems that the volume signature on the PNF works so well, and I'm actually kind of so excited about this, to use the volume signature on the PNF. But it identifies the first attempt to stop the price from going down. And this is where supply is coming in, even on this move to the upside. And look how close it is to the buy-in climax. So that's why the count extends to this line. Another point that I want to make here is now that we're in the vicinity, well, we are like in the middle of the minimum and maximum count targets for us. We are thinking, what should happen here? It comes at the level of the support that was defined before in previous instances of the stop in action. And we want to understand, would the price react off this low when we reach the objective? So that's our next task. And we could start with the idea that on the change of character column that we've identified, we had a lot of supply, we had a lot of selling, but then look what happens next. All of the columns to the downside, the zeros, first of all, they are decreasing in the volume signature, so we know that supply is exhausted at this point of time. And secondly, the number of columns is diminishing, the number of boxes in the column is diminishing, decreasing. So that shows that the result to the downside also is decreasing. So on the decreasing supply signature, we have the exhaustion of the price to go down. We are bound for the rally. Bruce?
Well, and also it is still conceivable that if on the conclusion of this rally, which may be short in duration, that there may be an attempt to go back down and retest or spring these recent lows that we've just had into the channel. And so, and takes us to the maximum count, and then we get a rally of larger size.
Maybe something like this, Bruce?
Yeah, something like that, exactly. Very good. And so this is still potentially ahead of us, so we have to be on our toes for that.
All right. Should we look at the intraday picture, Bruce?
Absolutely.
Just to think about the possibility of the rally. And yesterday, we were supposed to record this yesterday. So we were right here, Bruce, around this bar, discussing the nature of the down move and the early intraday action. And both of us were saying that looking at the rally that we have here on the intraday and comparing this rally to the previous attempts to go up, we kind of could see that this is a different type of rally. You know, it travels up so aggressively, and there is an ease of movement on the way up, even though there is definitely some demand behind it, but it moves easier. And that comes, Bruce, to me, you know, with a lot of the loss of the momentum to the downside. Yeah. As we're trying to commit more and more to the downside, we are unable to do so. And that's on the background of the overall longer-term downtrend here on the intraday picture, where we are touching or close to the support levels. Bruce?
Each one of these declines is actually an event that makes the vast majority of market participants bearish. So these thrusts down to minor new lows are psychological events for people, and so they see on the, you know, on the computer screen or the TV screen that new lows are being made, and the market is quite volatile on the way down. But when you see it from the perspective of this intraday chart, you can see the loss of momentum in each one of these declines down to a new low, and then the attempt to rally. And so in Wyckoff, we're asking the question, you know, what is the quality of the decline? What is the quality of the rally? And so we can see that there was a really nice reversal upward off of that really difficult decline back on the 29th. And so there was a very sharp decline that went down, and then immediately it reversed itself. And the real clue, or the real evidence that there's a change of character, is this backing up action that occurred on the 30th. And so there you can see that unlike what preceded it, the prior declines pretty much, they were weaker. They were able to easily go to new lows. And this time on the 30th, there's an attempt to go down. It's got a backing up action characteristic, meaning that there's a resistance to declining. And so there's an attempt to go down, but it's very shallow. And this is a really important clue that the market just doesn't want to go down anymore. And so we're looking to see what kind of a reaction there is off of this backup. And there's a really nice rally that occurs with the gap into the trading on the 31st. Vermont.
This area right here is extremely important. Maybe we could miss the quality of the rally that we had in the morning of the 30th. But then, as Bruce has said, look at the reaction, the quality of this reaction. This is different reaction. Look at the previous reactions of the rally, of the lows. We always would have some kind of failure, right? So, well, in this case, it continued, but still hit the resistance and then failed back. This reaction is a little bit too big, to the downside compared to the reaction on the 30th. So it's a different quality. And then if you were not sure yesterday that we are going to have some kind of reversal, look into the close of yesterday. For the first time, we have not just a continuation out of the reaction, but we actually break in a down-sloping resistance here, and we're closing above. And we are not closing in the upthrust type of manner where we're temporarily committing above this red line and then we are failing back, temporarily committing and then falling back. No, we are actually staying above, and we have multiple closes above this resistance. So that shows strength, and no wonder that we have a gap today. And on that gap, not only the price is advancing, but it's advancing above the previous longer term line. And actually, as of the time that we're recording this, it's above and holding. Bruce?
Now, there's some important resistance up here, and we can see the characteristics of accumulation forming. And throughout this structure, even with each one of these declines to a minor new low, we could visualize that as being part of an important accumulation area on a 15-minute chart. And so we're thinking point and figure count. It's not a completed accumulation yet, but that there's the potential accumulation and account for higher prices that is still developing. And so here, we see that there's overhead resistance, and it's right about in the area that the market has rallied to on the 31st. And so an attempt to pause and potentially have a bigger backing up action, which is what was drawn here, builds a bigger point and figure count for a bigger move. And so there is work that could be done to complete the accumulation area that is still ahead of this market from the point of the 31st. And then after that, we look for a bigger sign of strength, bigger jumping action, more robust rallying potential. And this is all within the context of intraday trading. And so this may build a count that can produce a run up to higher levels. Maybe it doesn't get back to the prior high, but that is in the context of the daily or weekly chart, is we want to then judge the quality of the rally that comes out of this support area. And so if this can complete an accumulation, it can start to have a more important rally. Does this rally have the potential to produce a good run up, or is it going to be another lower high that allows the market to then rest and then prepare for another decline? And so this is a very important rally that we're going to be judging, engaging as this, hopefully this accumulation area completes. Vermont?
Well, a confirmation of the buying that came from institutions around the 23rd to the 31st comes from the volume signature. We see that the volume signature, even on the intraday basis, is increasing slightly over the period that is contextually the same. It's this attempt to stop the price from moving further down. So this increase in the volume signature suggests that institutions are more active on the buy side and therefore we should have some kind of rally. So, and we definitely will be taking more conservative counts first, extending them and seeing where rally, how rally is behaving, because one of the things that Bruce has mentioned, there is a possibility of the failure of this rally as well. As of now, this stop in action support is being tested on the intraday level, and if it fails back into the range, or if it consolidates and then fails back, then we would be thinking, as Bruce has said, low or high, and then a possible retest of the lower targets here. All right, well, Bruce, if we're expecting the rally, then the natural question for us, a tactical question, is to what is it exactly that we should be looking for from the stock selection point of view?
Well, so here's just an example of the type of stock that and circumstances that we would be looking for in a environment like we're in right now. So you can see here that this Dollar General goes all the way back. We can see the January peak in Dollar General that coincides with the buying climax in the market, and then there's an automatic reaction. Dollar General is actually weaker than the market into the March lows, and then builds a cause, has a decline into late May that is a higher low, and you can see down here the relative strength, and the relative strength is actually making a higher low from the March low relative strength before that, and this is a good early warning. Now the rally that comes off of that LPS is quite a good rally, and then look at the backing up action that occurs for about 5 weeks. And that has very little give back. It just pauses, which shows that there's likely that all of this that preceded it was accumulation. Well, look what's happened here after a major sign of strength and a jumping out. Look at the backup. The backup goes into the area of prior resistance, which is now support, goes down there for a very brief period of time, and Dollar General is not remotely following the script of the market, where the market goes down in the month of October substantially and goes down to near the support areas of the year. Well, Dollar General is nowhere near that. Vermont?
Well, we want to give you guys a template. We want to give you an answer to the question of what stocks should you be selecting right now. If we're thinking that there's going to be a rally, even a short-term rally within the context of a bear market, or a rally that's going to have elements of absorption on the way up, or there's going to be an absorption area, and then the price, the markets will go higher. So what's your selection? So the template here is that we want to identify the stocks that are outperformers, and relative strength ratio line is going to help us with that decision. We want to find higher highs, higher lows. The second thing that we want to understand is the structure. So here we have concluded a reaccumulation, and we are concluding the backing up action, which is really good. And then the third thing that we want to identify is during the market reactions that we've had in October, how's the stock behaving? And we're seeing that in October, there was just an attempt to go down. It stopped on the area of the support that acted before as the resistance. And then we actually have a move to the upside. So those are the three characteristics that we're looking for. Bruce?
Well, Roman, we are done for this week. Thank you so much. And we will see you all next week. Thank you.
Thank you. Bye-bye.